Ever wonder why crypto pumps when nobody's talking about it and then starts to dump when CNBC or other media starts talking about it? It's not luck, it's liquidity. And if you don't understand how money flows in and out of the market, you're going to keep on getting blindsided. Hey, this is Colin. I help purpose-driven beginners build real wealth in crypto using macro strategies and building a conviction-based portfolio and with a kingdom mindset. Most beginners only look at the charts and hype, and the truth is that crypto doesn't move randomly. It moves with the flow of global money. And I had to learn this the hard way by not selling at top signals and then end up watching my portfolio bleed out and crash in 2022. But then I started to really learn and study the macro and study global liquidity and how the liquidity really affects the financial markets. If you've ever felt confused about inflation, the interest rates, the Feds, all those headlines about the Feds and what they're going to do next, how it all really affects your crypto bags, well, this video's for you. Because today I'm going to break it all down for you very, very simple without any economics degree required. But if you want the full story or the full system as well, step by step, how to master the macro cycle, master macro strategies like this, make sure that you get my Crypto Wealth Playbook where I break it all down, the whole crypto cycle, and building a conviction-based portfolio, and following the macro cycle, the macro strategies. But now let's get started here, and let's start with why crypto follows the global money flow. Let's start here. Understand this, that crypto is a risk asset. That means that when there's extra money in the system, liquidity is flowing, when central banks are printing and interest rates are low, and the economy is being stimulated, well, investors are looking for growth opportunities, such as crypto. So that means that risk assets like crypto, they explode. But when the opposite happens, rates go up, money printing stops, debt becomes expensive, and then money leaves the system and crypto suffers. Crypto isn't just about hype, it's about money flowing. The money flows, it affects crypto. If there's no fresh money coming in to the markets, well, it's going to dry up. Liquidity dries up. It doesn't matter how good the tech is and how bullish people are with that tech either. This is why some of the best times to buy are the scariest times, because money is tight. And some of the worst times to buy is when everybody's euphoric. The market's euphoric. It's going parabolic. That's some of the worst times to buy. You see, money is already in. Liquidity is already flowing in like crazy. It's already flowed in. So now the markets are pumping. It's already peaking. Understanding this one thing is what really, really helped me. It changed everything for me. Next, understanding how the Fed, inflation, and the dollar index, the DXY, affect and moves the market. Let's talk about three big macro players that affect the crypto market. Number one is the Fed, the Federal Reserve. The Fed controls the interest rates and liquidity. When the Fed cuts rates and does quantitative easing, QE, they inject money into the system and crypto pumps. And when they raise rates, quantitative tightening, QT, well, they remove liquidity and crypto dumps. So when you hear rate hikes, soft landing, it matters much more than any altcoin news. Number two is inflation data, CPI reports. High inflation equals the Fed stays aggressive. Lower inflation, it means that the Feds can pivot. That's why CPI reports are watched like a hawk. They hint at what the Feds are going to do next. And that impacts all the markets, all the financial markets, not just crypto, but all of the financial markets. It just happens that crypto, well, because it's so volatile, it gets affected the most. And number 3 is the DXY, the DXY, dollar index. When the DXY is strong, it means that people are moving into the dollar. It's referred as the risk-off mode. And when the DXY, the dollar index, weakens, it's dropping, well, people are moving from the dollar into risk-on assets, moving from cash to, for example, coin and crypto. So here's the cheat code. When the DXY is down, going down, well, it's bullish for Bitcoin and crypto. When the DXY is moving up, well, it's bearish. It's risk-off time. Watch out. Next, how do we track the macro without being an economist? Well, the good news is you don't need to have a PhD to track this stuff. Let me give you 3 simple tools that I personally use to track this. Number 1 is TradingView. I use TradingView. Open up the TradingView charts. Type in DXY and you'll find the DXY chart. If it's trending down, well, liquidity is flowing in. If it's trending up, well, liquidity is flowing out. Next is macromicro.me or look into bitcoin.com. These sites give free charts on M2, global money supply, the federal balance sheet with QE and QT, inflation trends, inflation data, and the interest rate forecasts. It's super visual and super beginner friendly. Just follow a few macro voices. You don't need to follow 50 different economists or anything. Follow 2 or 3 people that talk about this sort of stuff. Follow them and learn what they're saying. Just keep informed about the macro that's happening in the markets. I personally share how I'm tracking all this, what I watch, all the signals, all what the indicators, all within my crypto wealth playbook. That's what the playbook's all about. It's a crypto cycle playbook. How you can play the whole crypto cycle as a macro, watching all the macro signals, watching the indicators. It's a macro strategy as well as your conviction-based portfolio. I put it together for myself because I wanted to know what I need to look for, what I'm doing, how I'm tracking all this stuff. And I figured, hey, this stuff needs to be shared. I'm going to package this all into a playbook for people. Now, let's be real here. Most people got wrecked in 2022, not because they bought the wrong tokens and invested in the wrong projects, but because they bought at the wrong time and they sold at the wrong time. They weren't able to time the market. They didn't understand the cycle. And then they didn't have conviction in what they were holding. A lot of people bought when it was euphoric. It was parabolic. Euphoria was just going crazy. And so they bought during the tops, during the huge liquidity rush, that when liquidity was already flowing and just pushing the markets up. And then they started to sell as liquidity started to dry up and started to leave the markets, right? And hey, let's face it, like it's real, of course, right? This past bear market was tough. This past few years, it was tough. We were in the longest, hardest, craziest bear market where people were wondering, like, is it ever going to go up again? What is happening? What is going on? Why are we in such a time like this? Like, when's the bull run? When is it happening? When's alt season, right? We've been hearing a lot of that. But if you understood the macro, if you understood what was going on, you still sat there with patience and just understood, look, hey, these signals are not flashing yet. Hey, these projects are quality. Hey, these tokens, what I've got, they have huge value. They may be down, but I still understand the value and I'm just going to be able to buy more, right? Because you understand, you've got the conviction in what you're holding and you understand the whole market as a whole, in the whole macro view. And so that's why I believe it is so super important to understand the macro and have conviction in what you are holding. Understand when liquidity is flowing in, flowing out. Understand that you buy as the liquidity is flowing in. Time it so that you're buying before that tidal wave really comes in, and you scale out as liquidity peaks. And you don't FOMO anymore. We don't do that. We don't FOMO and buy the green candles at the top. No, I mean, not everything is perfect, right? But it's a framework. It's a strategy. So if you found value at all in this content, you know what to do. Smash that like button. Drop me a comment down below and let me know what your thoughts are. If you're not yet subscribed, well, you know what to do there as well. Click subscribe. Make sure you got the bell on so you get the next videos that are coming out. And I've got another playlist right here that I believe you're going to find some value in these lessons as well. So head on over there, check them out. I'll be there. See you there. Bye for now.